we just keep seeing back to back silver price gains. Same thing with gold. Gold is finally back above 1800. Like I have been calling for the last couple of weeks, we're going to see gold go back above 1800, and we're seeing silver move higher. If you saw yesterday's episode, then you know that I've been looking at that mid range in the 20s for silver with my silver price forecasting model. This is playing out pretty much the same way. So guys, if you are new to this channel, hit that subscribe button down below, or if you've been watching for a while and haven't subscribed, you definitely want to subscribe because we're going to be talking a lot more about the forecast for gold and silver prices, especially in today's episode. So let's get started here. So we are seeing positive day after day gains in gold and silver prices. So we're going to be talking a little bit about fundamentals, historical data, but also let's start off with a little bit of technical analysis, and then we'll dip back into it again a little bit later on in today's episode. So this is silver, and as you can see here, silver is zooming above that yellow trend line there that I drew and that it pretty much established since late September. And it's been looking even more positive since it last bared back down and touched the trend line. It's coming back up, but even more positively as it's been hugging the upper part of the Bollinger Bands. And following suit to this, the RSI is getting close to overbought territory. So yes, we may start to see a little bit of a breather, but I do think that we're going to start to see prices head back into positive territory as we've been seeing these moving averages in the MACD really trend in the negative territory for some time. Now we're starting to see it move back above into positive territory, finally, for silver. So what exactly are we seeing historically that looks similar to where we are right now in silver, and that may let us know what we could be seeing in price movements in the future? Now, this comes from Jeff Clark from goldsilver.com. Mike Maloney's website. And this is pretty much what he's seeing. He sees the following: the silver jailbreak. The current silver price is even more eerily similar to the mid 1970s than gold. And he earlier on this article made a comparison with gold, but today we're focusing more on silver. So as you can see here, he puts these graphs up. One is of August 2020 to present, and the other is February 1974 to 1976. The 70s is in the dark black, and the current time is in the gray area. So let's scroll down here and see exactly what he has to say. This compares both price periods after their initial crash, as I wanted to zoom in to see if they were behaving similarly, and you can see they indeed are. Like gold, the silver price was surrounded by factors that most thought would push it up, similar to today, but it remained weak for 2 years. So in what he's saying is basically in the mid 1970s, there are things that are happening with gold that fundamentally should have pushed it up, but gold was just kind of chilling out. Same thing with silver is what he's saying. And he's seeing the same thing here with our current times. Not just with what happened in the 1970s, but he's seeing this happening now. Let's continue. And also like gold, the next chapter in silver would prove all doubters and naysayers horribly wrong. The spring under silver was basically coiling, eventually leading to a blow-off top that stunned the investment community and led to a full-blown mania. So let's take a look at these gains. Silver's gain after mid-1970s crash, 1,150% gain in 4 years, as you can see here. So let's scroll down. Silver rose over 11-fold from its low to high in 4 years. For the investor who bought near the mid-1970s low and sold near the 1980 top, they basically could have added a zero to their investment. Again, this setup sounds awfully similar to what we have today. A falling silver price surrounded by major catalysts that are likely doing nothing but tightening the spring under the price to a point where it's likely to explode in the near future. The spring is tightening. The message is clear. Unless there is such a thing as a free lunch, the economic market and monetary catalysts surrounding gold and silver today are building the pressure under them greater and greater. Our job is to make sure we're financially prepared. So I'm just going to stop right there and basically show you another point as to why I also pretty much agree with Jeff Clark. I actually made this tweet last night, and I wanted to take a look at the 10-2 because I haven't really spoken about it in maybe a couple of weeks or so. But I made this tweet yesterday. If you're not on Twitter, or if you are on Twitter, follow me at Investing with TJ. But this is what I said. The 10-2 yield curve has taken another breather at its cyclical halfway point. We still have much more room to go. So what exactly am I talking about here? We're currently at the 1.23 level. Remember, we were like around 1.09 and 1.08 for a while. But this is basically where we are. And these are the cycle highs. We should be expecting cycle highs above 2.5. And we're not out of that yet. We've barely even gone above 1.5. We're at 1.2 currently. So if this does follow the same pattern that we should expect as far as inflation expectations are concerned, then we should be seeing much higher prices in the future once this graph goes above 2 or 2.5. We should be seeing much higher prices as there's much more room to go between where we are now and the cycle highs. So that essentially is looking pretty good for silver and gold. Let's take a look at some moving averages here for silver. So if we scroll down here, as we know, I said we might be taking a little bit of a breather, but here we have some moving averages that look pretty positive for silver. Now, the green line is the 20-day moving average, yellow is 50-day, and the red is 250-day. And I use these because it pretty much matches with a month, a quarter, and close to about a year. So as you can see here, we are getting really close to crossing above the 50-day. Finally, it's been a long time since we actually were above the 50-day moving average as far as the 20-day is concerned. We have to go pretty much all the way back to, let's see, what is this? We were basically back in June, late June, the last time we were above the 50-day moving average. So it looks like we're trying to get back above that point and get back on track. So as we're heading up, I expect to see silver prices to get close to about 25. It looks like there's a bit of a resistance level. And as you guys know, these major dollar levels for silver tend to be pretty strong for resistance. As you can see here, even looking at the Fibonacci levels, they're pretty close to where the $25 one is. This level is pretty close to $26. This level is pretty close to $27. So they're getting dangerously close to a pretty strong resistance level. I expect that if we get close to that, we may touch it and then come back down a little bit and then retest it, and in my view, probably get above $25 eventually. But as far as what you guys think, let me know in the comment section below. Please hit that subscribe button, hit the like button. Thanks again for watching. It is Investing with TJ.